Good morning, everybody. This is Wednesday, the 21st of August. To see a new pre-market lower volume edge. This is 178.54. So we're right now at the open phase, and what you can see here is basically that they tested this area here from the 54 in the open phase, and now here is some little bit bimodal distribution from the pre-market. Additionally, this is the range market number one, and also we have this other range market from this distribution low overall from yesterday. So that means the week 51, 50% of the week down to the 47. So this is where we find orientation here to get in our range longs. You see today Bund is a little bit a sandwich market as long as it stays in between this 47 area up to the 95. That means we're within a lower volume node now within the yesterday distribution. There were 3 distributions yesterday, a multi-distribution day yesterday. You see that with the main distribution is up here, and so that means within this area here we're like in a sandwich market. That means what we can trade then is not the trend trade with the home run target continuation, but also not the short trend is as long as we stay within, I told you, this separated area. So we will see now if there is a pressure coming in at the low. So we're looking for the initiative sellers with holding and weak pullback to get into a short. Then we have the option to get to this lower volume node here in the composite profile from the week, or even in this lower distribution. But think of it, you need to see then below the week's 50 and below the 47, this volume edge. We need to see initiative sellers increasing sell volume and a weak pullback. We can spot weakness in delta, remember, not in the price move, because price move could be going back even more without danger if it's based on a lack of liquidity in the ask when pulling back. That means from the distance moving back is no signs for a strong pullback already from the buy side. We use delta to spot this. So right now, take a break. We look now what they do if we can go into a more rangy trade at this level, starting from 54 and it's going down even to 47. So be careful if it's not working the first time here with responsive buying. Be ready then for a second trade and wait for reactions here at the 50 to 47 level. Remember what I said before we started with the cash open? I said that it is more likely today, as we are in a kind of, I called it the sandwich market within a multiple distribution day. That means we're not within an area where we do expect that OTF traders, longer term traders, are coming in and helps us to push the price in either or the other direction. So you see this? The huge difference just from the behavior, from the speed of orders, from the speed of how market moves. You see, this is what kind of described as a slow, weak market yet. So I was looking at this moment as I saw testing again here and responsive buying coming back in again. I was looking here for a cheap entry at the 56 level. So that means a 2 tick below this area, but I was not filled. I wasn't filled here, and I didn't want to jump after price because my first target would be already here at the 64. That means if I got in here at the 59 level, this would mean that we have to go first through this lower volume node, really take it out before we can reach the 64 level. So for me, risk reward was minimum. That means it would be able to get into this trade. It was a good reward situation. Scalping for minimum to get into this trade, I would take this trade. It's okay, but I wasn't filled, and so I'm not gonna want to go into it. So at the moment where we see that they coming back, there was only a 59 price available anymore at this moment, and 59 for me to this area here, we're already seeing some weaknesses in the market. With only maybe 2-3 ticks. If it's really good, we get the 4. Right now we only get 1-2-3 ticks. So I didn't want to jump after, hunt the price just for getting in. So this is what we can mark in our notes. Today so far a slow weak market. It's typical as long as we are without direction, moving within a little bit neutral no man's land. Interesting will be to see if we leaving the yesterday lower value edge. That means somebody need to push up below the 47, and somebody big enough is the opinion that we are too expensive here and want to look then for prices back into the Monday main distribution, or at least checking out the edge here at the 26 to 31 level. This would be then interesting and would give us a good risk reward. This is also then the trade opportunity from my hypo number 2. Right now we're still in hypo number 1, the range long levels pre-market, where we are right now at the moment, and also 51 to 47 before short can come in. And you see, I wasn't so wrong with this assumption that here at the top they made it hardly above this low volume node, and one entering at 59 would only get a 3 tick reward before they already get out of the position again. Now some pressure we want to see. Either remember responsive buying now here at the 51 level, double rejection, or they have enough space even to the 47. But you see here we have some wonderful liquidity here with about 800 contracts providing liquidity at the 50. So we will see now very good how they react. And if we go through an increasing sell volume through the low, that means through the 47 level as well, we're looking here for a weak pullback to get into a short trade because we have a good risk reward at this level. If there are no signs of strength but responsive buying, no long as long we don't see a double rejection. All right? All right, this is now the pullback. That means first we did not take out the low, so no short yet, because look at my hypo that said we want to see increasing sell volume into the 47. We have now a wonderful proven thing here that the people first reacting on the long-term liquidity you see here. This long-term liquidity is already in, starting here at the pre-market, the old pre-market time at 8 o'clock. So what we now want to see now is that they pulling now, as they pull back here to the initiative selling area where they started then to sell, we have then the chance to see if they pulling back and only get it maybe to the halfway, or it's okay also if they get to the low again. But what we see, if we spot them, the aggressive, responsive buying, you can look then for the long trade with a good risk reward and the chance that they make it up to this edge here and even go up to the 64 and more. So that's what we want to see. If they already start now buying again here, boom, 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 and push us up again, then that's no entry because we have no good risk reward in terms of cheap price entry. But a wonderful pattern would be now seeing the retest, and you got two plays. Either if aggressive rejection from the buy side, looking then for the long, we have then the double rejection and cheap price entry. And option number two would be we get with a lot of pressure back to the low and taking out this liquidity support at 51 and even boom get into 47 and below. So that means looking then for a weak pullback, trying to get in as fast as possible then for a cheap entry with a good risk reward, because we have then target number one at the 39 level, target number two around the 34, 35, and even more to the 30 level is possible. But we need to see one of those two patterns. And again, if those two are not appearing, no rejection, no responsive or initiative for the short, then we stay flat, because this is trading. We need to see that the things that happens that support and give us an edge for our plays. But risk reward at this area is for both directions then pretty awesome. Okay, we're still in the pullback phase. You see this here? Reaching the POC, they pulled it back a little bit higher because we see they start here. And now what we want to spot now is as they're going lower here, we want to see, do they really grab these pieces for responsive buying, rejection, like a pin bar, bullish pin bar candle here in the delta. So do we see this? No, right now not. Do we see prices not going lower? Yeah, we do see this as well. What does this mean? Right now we have absorption. What does this mean for our trading? Nothing, because this is not what we're looking for. We're just looking for rejection. But right now we still have seen initiative sellers at the low. But remember, we have a quite comfortable situation. If we see the aggressive rejection from the buy side, let's go for the long then. But on the other side, they need to take out this liquidity first at 50. This 800 contracts here need to be taken out if we're really looking then for a sell side, for the sell side, for the short. And as long as this is not happening, we do nothing. We just watch and try to spot what is happening. All right, wonderful. Now that we are at the 47 level, we want to see now that they leaving this edge here and then wait for a weak pullback. You have to be fast there. We just want to see that the way when it's about to stop the impulse, so we may see now the impulse, boom, okay, pushing lower. And then we just want to see that the delta is not building, boom, green, big buying rejection. When we don't see this buying rejection, we going in for a short trade. Now we have the rejection. Look, is this weak? Is it weak? Yes. Right now it's weak. So this is good. It's just a weak. It's just a weak rejection yet. So we see where's our stop now. We see this is the protection level 50 around. So that means this is where we have started. That means at least at 50 up here where the initiative setting started, at least 51, 52 should be, 51 should be your stop there. No big buying rejection yet, all right? So we're at the top, we're at the low, they took it out. What we not want to see is boom, big green buying coming into. This is what we not want to see. We're still in a sell mode. Don't hurry. We saw some buying, but it was not big. And then you see sellers coming back. Now the second attempt on the downside. Now you can be careful. You don't have to wait that price is coming back too much now to the upside again. Because we see buyer a little bit, then sellers try it again. And now what we now want to see is that they, boom, push it again to the upside. Then you can leave this trade immediately. All right? Then it's okay. Because now we're in the book with the shorts. Now we just wait. We wait, there are some sellers, but we need to see increasing sell pressure. Remember, we have shorts in the book. We pulled back. We found sellers again. Sellers are more in the book now. Risk is in the book on the short side. We don't want to see now big rejection from the buy side. But if this not is happening, and the internals are on our side, as long as this is like it looks like everything is okay, then it just takes time. They may wedging around, and we will say what happened. If the big buyer's rejection coming, we go out. If it's not coming, we stay in. Target area number 1, 39. Target number 2, 34. All right, we have impulse phase number 1 after the first time we extend the low. Now you can pull your stop tighter. In my case, that means that I pull my stop now at -3 from the entry area. So we see now they're making pressure. We're making pressure. We have some level at 40 of interest. Right now, I do nothing. If they take out the 40 level, I pull my stop to the entry level, because this will be then the impulse phase number 2. That means ongoing power in the sell. So that means then it's okay. If not, I'm just get stopped out then at -3 or whatever. Now I can pull my stop to the entry level. Now we took out this level and we made the move number 2. And look in, this is our first target here at the 39. I'm not want to see now that the price is coming back higher than my entry level here around 55, 50 at 46. And as long as they stay below, for me, everything is okay. So either I got stopped out with a little 0 to -1 trade, or I'm now staying in control and we reach our target. So right now they build pressure. That means the buy side says, oh, I'm gonna protect this. This is a cheap price already. We will go back and find value, so they want to protect it, but you don't know. Maybe it's just a guy who wants to get in the bigger picture into a long and get filled through the power of sellers. That means some guy from an investment firm who just want to get filled here for an order. Nobody knows. But you see here, this is the level where we want to say stay in control. That means below the 46 level. Below the 46 level. And if they cannot stay in control, the sellers, and already now given up after the first impulse phase, so impulse phase number 1, after the short side, this will be a sign of weakness now. And I would leave this trade, because this would not lead to too much hope into a ongoing more shortish trade. And it seems like it's weak for me. I'm out of this. So by my rule, again, remember, we saw taking out this liquidity, then taking out the 47, making a lower low than 47 with sell pressure. Then you saw pulling back at this moment here, pulling back, and boom, new sellers coming in, investing new money for the short side, Wave number 1, impulse phase number 1 started here, boom, took out, get to the liquidity point at 40, failed once, failed twice here around this area, and now going back, can stay in control, but you see that they take out even the level of the last support area around the 46. So right now, for me, this is a little bit sign of a weak short now. So I don't give it a second chance now. I'm also neither looking here for the long, so I'm just staying flat then. So this move up was just due to a lack of liquidity on the upside yet. That means don't let you fool by the market. That streak from here up to this here, taking out the micro high low here from this double button, kind of in about to forming shape, is not indicated by a lot of buying. They just bought in the last 20 seconds more pieces, but not so much. So this was just due to lack of liquidity in the upside. So no strength now. It's still a little bit better now for a failure of this scenario. This is why I left my trade, as I can show you here, as I told you in live. Look at here. I just left with this signs of weakness, trying to make a lower low here. See this? Made it. Then hitting liquidity, couldn't sell more than 30 contracts into that bid. 30 contracts was sold market into the bid. Find 30 buyers and then they coming back. And this was the reason why then I took out with the ongoing buying here. I took out here my trade because I didn't want to see that is coming back now from this second wave of initiative sellers. See this here, the second wave from here. So that means starting here and my stop was then there. So on scratch, got out on scratch -1. And here I think it was good to see that here is a little bit more now the advantage that this pattern fails as the way as it was traded when it reacts to this liquidity that was pulled in here shortly before, about 5 minutes before when they entered the lower area. So now we are at the selling control level. This is from the 49 up to the 51. So that means if they can even take out this, market has then the higher probability. If they take it out with volume, if you see here push volume, buying volume, and take out the 51 level and going above, but we need to see buy volume. Then if you trade this trade, then you can go in with the pullback, or you can go in, let the stop at 4 or 5 ticks, and your target would be then the 57. So that would be the re-entering of the morning value trade. And you can do this. That depends on if you get a cheap price. If you're getting a cheap price, this is a good trade because you can go then maybe from the 50, 51 area up to the 57, 58. So that would mean 5, 6, 7 ticks. So that's okay. But only if you get a cheap price. And remember, don't force it. We need to see that they take out the high 51, the selling control level with bullish volume. Remember, we had this kind of market about 2 weeks ago. I call this kind of sandwich market, where only more short-term traders and also no direction is given by the market because we're a little bit within a mode of market is over long-term. Think of it, look at this here. Market is in the long-term in a correction mode because we now made this push up in the early August, then made in some correction here in the mid of August till the 12th, and then we're going up again. Right now we are in this phase here. You see this? That means we are in the correction phase, and market is not by any direction forced to handle right now. We still can move a little bit to the downside. Everything would be still in a high term bullish area, but within the week you see we're in a multiple distribution day and caught inside, so nothing here where you can be very expecting a fast moving market with a lot of orders, because look at this situation we had the weeks before, when you always starting here above yesterday value, above yesterday value, above yesterday value before we get into the shortish move. And now right now we are caught in the middle. This is typical. We see the correction phase, and then someday maybe of kind of more balanced, need to find their direction first. All right, you see, this is just a slow and weak market. So don't expect that your place or my place to work the same way they do on the normal volatility, normal speed market. You see, there's a difference. It means it's no shame that your place not be as successful as a normal volatility or normal speed days. So that's then totally okay. That means I will be carefully, and I'm not gonna expect too much from the way that the price moves are shaped and how long it takes. Look at this. This is very clumsy and blurred, double rejection here. That means we saw here at this moment, I will make a short print to it, a screenshot, and print it. Print here. Okay, see that this was initiative selling, starting here, initiative selling, pulling back, weak pullback, so good for us. Gambling a little bit around, I entered, still weak, going up, find new sellers, perfect. Taken out the low, perfect. Made a new low, impulse phase number 1. And now failing to take out this liquidity. Rejection, a little bit more. And look at this here now, boom, even more. Means a weak selling compared from this number 2 to this selling, not so good. See my stop now closer, -1, good. And now see second leg here, and now gambling around at this area. So I told you, if we take out 52 with a lot of greenish power by buyers, that means a candle in the delta would look like boom, then you have the chance that the price is going from a cheap entry up to the POC or the edge even, again, before pulling back and find balance. All right, you see now they taken out with liquidity the high. That means if you got in now here at this level 50, 51, you can have the chance to get to the 57 level. All right, one need to take care now with this trade. Because see this, after they take out the high here, at this moment, you see that already sellers coming in again. That means for those who have sold already may see this still as a possible selling control level. That means that they are a little bit not overconfident now in buying it. That means we need some more confidence in buying and we need to see that they stay alive. What we now want to see is a big red candle now here at the low. This have not happened yet. You see now at the low, they find buyers again here, calming down and boom, buying again. So stay in this trade. But if prices consolidates around this wedge consolidation here and at the low, you see then boom, push of red short delta into the low, leave this trade, because then that means that the buyers still trying to find the sellers still trying to find a cheap entry here to play already here the short. If this is not happening at the low, then everything is okay. They can wedge around here, but we don't want to see at the low boom pressure by the sell side. All right. So if this is not happening, the pressure by the sell side, you see buyers are here, everything okay. You stay in this trade with your first target 57. Now look at the delta structure. If we hit the 51 area and we see ongoing selling pressure, boom, we leave this trade. This was a sign of weakness. buy side still absorbs the sellers. Buy side still absorbed the sellers. And price didn't touch the 51 area. So no judging about price, action and delta. Everything is okay as long as they absorb. And at some time they of course need to find active buyers here at the top area. Then we need to see boom. So this must of course happen to reach then the target 57 target was. We're at the low. You've seen ongoing selling pressure here at the low of the microstructure. So be careful now. Another big red delta candle here would mean to leave this position. If this red delta candle is not coming, you can stay in the trade. Then you have still a chance that day testing after absorbed so many shorts that they test and go back into the cash open distribution. But as long as they sell, no way to get prices higher. We need some who pays the offer. Liquidity, lack of liquidity causes this move to the downside, not sell pressure, not sell pressure. All right, new sellers, I would leave this trade, this long trade. So you can get out here at the 49. That means you have, as I told you, I only would look here for cheap entry at the 51 level to get a good risk reward to the upside here after seeing that they don't get on, taken on, and pull out here, get out of this scenario with the longs pushing with good delta. So that means you only have lost 2 ticks. But you see today that it's a slow market and weak, and I didn't take that trade because I was at the door, the doorbell was ringing, and I didn't get the cheap entry here. So that means either you were flat or made 2 ticks minus. So this is nothing to talk about. But you see, they're still in control. That means sellers got absorbed, but stayed in control. And boom, buy side gives up, and the sellers trying it again. So that means it even did not reach the upper edge and at the moment POC. Now POC is shifted a little bit to the downside, but we have a normal distribution, but just blurry. So what we want to see now is the prices at least reaching this area of 45 and want to see responsive double buying. And if we see buying responsive, you can go here for the range trade. What we want to see is increasing sell pressure into the low, into the 41.40 area. But responsive buying started here from 45 down to 42 would be a good sign to look for the range long. And we don't expect much from this market, but this would be at least from looking from the perspective of this is our value, then this would be at least the cheapest price for a responsive buying long from here to there, and also from the other side, from the upside, from the upper side to the downside. But we're moving now for responsive buying at this edge from here to here. And if it's nothing happened, then okay, we stay flat. I will not waste my money when I see things that I can control. And the things I can control is how I react to what I see, knowing that there is a higher probability that market then was very tight, rangy, very tight, and no moves from the outside. So that means, okay, then remember, like 2 weeks ago, then this is one of the days, one of the 20% of the year of the days that happens where we then better stay flat. Being not in a position is also trading. That's very important, because you only need 2 out of 10 times really messing everything up to get your profit down to 0. This is no problem. Trust me. If you think this is a cool game where you can stay above it and say I have it in control, haha, then you're absolutely wrong in trading. You need to understand that this is absolutely no game in terms of no matter what, I will do my thing technically. This is the range long, bam, bam, bam. So this is not the case. We want to see that prices act like on a normal volatility and normal speedy day, but not like they do today. So you cannot expect that your place then work out very good. And you see, it's the lack of power is like lack of power to get it then higher to the range. The lack of power of other time frame traders to trading through the higher liquidity areas. That means the OTFs, they are just here in the passive side. They just letting them get filled, but they're not acting actively, because this is nothing where you want to open up moving new positions out of the distribution edges. We're inside, and so you see they failed taking out this low volume edge, and they're maybe now getting just more liquidity as they push people out of their longs, get more stopping out. And they trying to find then more buyers maybe here at the downside again from the 42 to the 45 area. But if we don't see this, even so, then there's no trade. We stay flat. We stay flat. And don't jump, please. Don't jump here already if you see now responsive buying, which is happening. See again how important it is to only act in the activity levels. So from here to here, and not judge delta now and always judging delta. I can read delta. Wow. This Anton said this is responsive buying, one rejection double. This is right, but this is not the area where we're looking for responsive buying. This is also very important. This is where I was caught in, like last year, for weeks and even months, when I was thinking of, wow, now I'm so good in reading tape and order book and the DOM and the delta. I was really good starting 1 year ago and reading these things, but then I started to measure every move in the market and measured here and measured here, measure maybe here. And you will always find those patterns, but they made no sense. It's important that you see it in context from your big picture preparation. And when you see developing markets, that you only put these measurements on at levels of interest. And this is the activity level from outside to inside range trading, where it matters will be here and not here. So don't waste your cognitive resources on watching it all the time. That makes you crazy and is the opposite of what you need to be consistent properly. All right, they are accumulated already here at this level, at this, let's call it this neckline from the second leg here. It was built here as they failed taking out the low again, so failing the breakout, and they took this neckline and accumulated. So for me, no trade here. Now they reached the target even here, and we see now that we are in a situation that we saw responsive selling now at the higher volume edge. At this high volume edge is the level of 59, and yeah, that's the level where you can look for a responsive selling. We saw the responsive selling, and okay, this is then a level where we can look for a range short. So they may test even the high again, fishing some liquidity, but right now you see as we hitting the high, rejection number 1 and rejection number 2. There are some people now in the range short with the target area around 53 and 49. There's liquidity at the 55, so that means it looks like a little bit they're trying to trap the sellers in this area here, but overall I have to judge about the situation. This is range trading, so don't let you fool by the market. Of course, they need to take out the liquidity first till we have the opportunity to reach our target area around the 51 to 49 area, but at least we saw the signs, and that's what you can do then. If you're going for range trading and don't execute, then you're wrong, because see, this is the range high, this is the double rejection 1 and 2, this is where you could have entered, and then you wait. And now we see impulse phase number 1. That means you can push your stop now closer. That means I pushed my stop closer now to the 61, and now we need to wait that price is testing and going to the other side. That means targets area the middle here at the 53 to 51, and on the other side 49 level. So I give the price the chance. They still have not taken out the liquidity yet at the level of 55. Testing this level again and again. Now liquidity is reduced to 358. Still some liquidity, but they don't sell too aggressive into it. You see this? 55 in the tape. Now they sold it out 362. All right, now we have the chance. Impulse phase number one. Now I will pull my stop closer to the entry level, means around the PUC here, to the 57, 58. And well, yes, let's see if they can make it with to the level of 50. Yeah, 50. I want to see at least the 51. This is the separation here where the buying started from. And this is also here the bigger volume edge where the accumulation started at 49. So at least, I mean, if they don't reach the 51, I will not take out this trade before, because, come on, this is my minimum risk reward. And my minimum reward I want to see then for this trade. So just give it a time now. If it's not working, and I don't want to see it going back to a 58, 9 level. So here I would stop out this position at the entry level. But as long as give it the room here to pull back a little and make its target. So let's wait. And if this is still, and if this is again not working out, this trade, so that means get stopped out at the entry level around like my first trade when the hypo, what was this? This was the hypo short number 2. So you see hypo 2 fails. If now hypo, the range short, the range trading, so the normal hypos 1, this is the range trading, no matter if long or short. If this fails again now, so not able to take out and even reach the 49 to 51 level, then that's it for me today. Then I will not trade. Then I will say, hey, I haven't lost money, okay, 20 bucks, but this is no problem then, and stay away from this market. If it's not able to even make the T1, the target 1 areas, so this would be absolutely, then what? So what? So what? Okay, wow, at least reached my target now. The volume edge here, the 52 level. And yeah, that's at least something. That means the range short worked out here in this profile. But I think, as you see now, they are already having trouble taking out and going to the bigger edge now. It's really weak today. We can spread it to able to read the numbers here. 55, 75, wherever, yeah, 60 from this edge. Now we're, yeah, may they take it. So of course this is the weak 50%. Of course there's some support now. Yeah, I think this was a good target here. So if you have a second position, you can hold on. As I said, this would be my target 2 here, the 49 level, because this is the bigger edge here, the high volume edge from the day. So you can stay in this trade, most definitely, as your stop would be now at the entry level, so here around, and you have secured now your first position with a 5 to 6 ticks, depends where you entered, but five ticks is realistic now from here to here. And now you can have your stop here at the entry level. It means short above the POC. That gives the chance, if they pulling back, if there's a chance that they even test the lower edges of the day. Okay, I think this is a good reward. No risk, because stop at 0 and shot the chance for getting to the 49 or even the 46 level. So if there's already then responsive buying starting, if they move really up low to this level 49, so you can secure then your second contract. But I think this was the cheap entry for the day. Watching, just trading the volume profile, seeing responsive buying as taken out and hitting the edge here, hitting here the 59, boom, boom, boom. Responsive selling number 1, responsive selling number 2, entering around here. So that's the chance where you get maybe the 49. So that's how I traded this rejection number 2, entered here and hit my target 151, 52 edge here, this edge. And now we're at the 49. You may not be filled yet. Oh, now you would be filled. 49, wonderful. So this would be then your target number 2 here. Got filled right now in the moment. For me, if you don't see now if you see now ongoing sell pressure, okay, we see ongoing sell pressure, stay in this trade. Even we have the chance to reach the bigger edge here at the 46. Stay in it, stay in it. All right, some buyers. If you see that a big responsive buying and people getting out of the position, I would do so as well. Because remember, don't expect too much from this market. This is just range trading. It's 10:20 already. We do see now almost hitting this area. 46, now reaching 46. 46 got traded. Wonderful. As long you don't see greenish delta and ongoing sell pressure, stay even in this trade, because you have the chance that this even go lower. So position 3 still alive, or position 2. See this here? Ongoing sell pressure, sell pressure. Liquidity is at the 40 level, still at the 40. If you see now big greenish yellow delta going out, if you see this, then we leave it. Boom. I would leave now. I would leave now. So, in terms of calculating here with the range trading, we had this target number 1 was reached here. We had target number 2, the next edge, high volume edge, and target number 3. We said there's a chance that they even test now the lower volume edge. So this is the 45 area. And you see liquidity was still at the 40 level, but you see how they reacted, reaching this lower volume edge here at the 45. This is where they made the pullback for the second leg, and you see now people get out of this position, getting out. And so you see it here in the footprint, people get into selling, occurred, then selling a little bit drying out at the low, 94, okay, and then boom, 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 people See that there's no ongoing selling anymore. This is different because see, there was never a second candle without 30 seconds time frame without letting going away from the sell pressure. See here, 230 in the low, only one candle, then 335 anymore, still, then only 71 and only 94. So 2 times a kind of drying up of the volume here at the low, and you see then how they react. Boom, boom, taking out their positions. So in this terms, you reached a good profit, which the maximum you can expect from a range trade, trading through the whole value after saying, okay, now this price is unfair. Sorry. After the C prices say, okay, no, this is unfair, double rejection, no bullish delta. You see this? We had some no bearish delta here anymore, and no bullish delta on the other side. Okay, that means we see just playing a range, didn't take out the high, didn't see some extension like expect this would happen here, extending down this area of interest, of liquidity, of the delta structure. They didn't do so, so we see just on the other side just a rejection number 1 and rejection number 2 means responsive selling here, entering, I entered, and you got target 1, 2 and 3 now. I think this is crystal clear, and market this time pays you, but you see how important it is anyway to play and execute every setup you see, even though sometimes you don't get paid, like I didn't get paid with this play here. But remember what wonderful supreme risk reward we had. Target 139, okay, wasn't touched. There was the liquidity support in the way, but we see then handling it right, seeing the second pressure wave to the downside wasn't huge, and then buying coming back. That means impulse phase 1 and impulse phase number 2, and then no reaction, not taking out the low, but only in price, not in delta structure, and ding, bam, buyers coming back. So you see, even though sometimes market don't pace you, it gives you at least in 50% of the time the chance to work with the adaptive stop handling to prevent you of a bigger loss. My maximum stop in this play was, as I didn't get the cheapest price, was at -6. So I worked with a -6 stop, but a profit of at least 7, 8 to 12 ticks win. Target 1, target 2. And on the other side, as my adaptive stop working with the impulse phases of a trade, I can handle that and say, okay, if it's now plopping back here, then I got stopped with maximum risk -6. But this happening only in about 1 out of 3, and 30% of the times you're getting your worst security stop. That means normally, in my case, it's -4 to -5. Okay, normally -4, -5 if everything is going wrong. So no problem for me because my risk reward trade is always better than 1-to-1. All right. Number 1. Number 2, in 2 of 3 times, so in 66% of the times, you get you get the option of a adaptive stop handling, reducing your risk. That means usually I can look at my statistics now. Normally, a losing trade gives me, from the last 2.5 weeks, where I measured more detailed all my lucrative and lousy trades now, so starting from late July, so almost 4 weeks now, it only gives me then, everything summed up, only 3 ticks. So that means by adaptive stop handling and the worst case initial stop, in mixing all together, I only get a 3 tick with a minus trade. Okay? And this is a good data because this is from almost 4 weeks. This is about 30 trades now. 30 trades, and mixing all together, it's only a 3 tick with a minus trade. And on the other side, I'm looking for only reward trades with a minimum of 1-to-1, so better than 1-to-1. You see here, I got 1, 2, 3, 4, 5 ticks. That means better than my risk was at this moment, because risk at the top area here was maximum 4. After impulse phase 1, 3. After impulse phase 2 here, it was set to the entry level short above at 58. That means, again, if I can have 5 or 6 ticks plus, and in what is it called? And in
in average only 3 ticks minus, then I have a situation of almost 2-to-1 risk reward. And then calculate, this is only now with the ranges. If I'm talking of a trend play, you get at least 3-to-1 risk reward. So that's the thing, adaptive stop handling, not based on your emotional, but based on how you're set up with a clear mindset and working with a clear mindset. All right, listen. Now, we're at the 40 area. This is the area where we want to see now that the ongoing sell pressure stops and see then a double rejection like here we have, like here, but without a breakout again to get into another responsive buying. Right now, don't go for the long side because you see a very good pressure is short already starting here. That means we have a selling control level and not only one, but two. See this? Selling control level 1, selling control level number 2. Now this is nothing I would work here with the long because they are able to stay in control even if they testing this area again, they can stay in control, or if they test even this area again, they have the chance to stay in control either. So that means you see in delta here, selling control level number 1 and selling number 2. That means initiative sellers are on their way. The pullback now wasn't super strong from the buy side. That means they still trying and now taking out the liquidity here at the 40. So why I'm not trading this? Why? Because we already extended it in the morning and now we are very close to my second target, and this is the 35. So that means if we enter this trade or have entered this trade here with the pullback, the chance was at the 40 level. At the 40 level means, as we see in the liquidity here, there was only 4 ticks profit with a trend play. A 4 tick profit with a trend play. This is weak because remember, where are we coming from? We're coming here and looking for an extension of this value, and where is now the place where we need to stop thinking of where it could be over again. And for me, this is the small distribution here, and you see in delta where all the buying starts. That means the 35 area for me is an area where I would already look here for the target. That means target number 1 with 1 lot and only 4 ticks reward. This is not good enough. You see, this is not at least 1-to-1. All right. Of course, they have a chance to make a lower lows and see an ongoing sell pressure, but then there's the next edge. This is the 30 level, 30 to 27, because here it's 27 to 30, we have the volume edge from Monday. So that means that this is also a reversal level. So I didn't want to go with this because risk reward for the first position was not good enough. If you're trading anyway, more than one position, and have a clear mindset, you of course can go for this trade, but I wouldn't advise you or recommend you to trade with more than one position. If you, as I am, in live trading, you first need to be active in your measuring and evaluation and be sure that you're having a good hit rate, having a good mindset, and making profit with one contract. Because remember, when you work with more contracts, then you need to be really clear mindset, have a really, really clear mindset. Every little mistake will lead to big revenge of your profit because it will lead to emotional pain and maybe more revenge trading or other emotional problems that then appear. All right, the trade is working though. Anyway, no matter what, I will not go for this trade because this is not my scenario. This is not what I worked out because remember, I'm going with my hypos and my hypo said, the short side is if increasing sell volume into 47 and weak pullback holding. We had this opportunity that failed and target was 39 and 35 plus. So see this here from here to here. This was target 2. I think it's obviously why I don't trade this. This would be against my rule. This would be a lousy trade. So for the future, always remember when you see my trading live and compare with my hypos, you will not see that I make trades outside of the levels where I see the activities of the day. And these activities of the day were clearly today within a range of 57 up to 65, up to 82, and up to 95 area. So this was the range where I provided today my hypos, and this is where then I will trade. And you see how strong they now react onto this level. That means the 35 level, of course, they always a little bit extending it, but you see how they react also on the liquidity here. So I think you can see clearly why I said this is not the area where I'm looking for a trade. Also, it was not prepared. So no excuses, and don't be then sad and say, "Oh, I didn't get this trade. This could give me 5 or 10 ticks." If you start thinking this way, then you're still in a mode of judging your trading by P&L and driven by emotions. And you know, what's the goal? Clear mindset, not emotions. All right. Now you see they pull liquidity from the 28 now back up to the 33 level. That means for sellers it would be even harder to get lower because there is the liquidity at 33. 33 provides 600 and right now 20 contracts here. So you see, this is some kind of beginning excess. That means when would it be a valuable information? And when can we talk about an excess? It would be if they now are pulling back, cannot take it out, and then you find increasing buy volume again at this structure. This would be a similar situation as we have here. Because look at this here. Our POC value is not shifting downwards yet. That means we need to first time to regulate this price. This price, what is it called? Oh, sorry, my English. Oh my God. Okay, this price advertising. Okay, this price advertises now lower. And I'm always coming back to this wonderful, you have it here so many times, this quote from Jim Dalton, but it's always the same. Time need to regulate first this advertising of the pricing lower. Price hitting lower, and we need to see that this is just not only an advertising lower prices, but time will regulate. That means if we can handle it, staying in control with selling below this 40 area right now and staying and ranging around, then we have the chance that not only price but also volume measures success or failure, and you would see then POC is shifted downwards. to the downside. All right? This will be good for the sellers. Then you can stay in this trade because then market is obviously trying to get back to the lows. But on the other side, if we see that the market is going up again, and this with a little bit more volume, and after failing, taking out the liquidity at 33, that means 33 if they cannot take it out, and then price is pulling back, some kind of second leg, like here, and bullish volume coming in again at the high here, then this would be the excess even in the 15 minutes charts. Right now we're having support because stock market a little bit pushed today again. Look at the DAX, it's making higher highs, higher lows. It's on the area of the this week's high around now. That means we are at the distribution edge of this week's high composite profile in the DAX. So this gives us the chances for staying in more shortish in the Bund, of course. And you see they took out the liquidity, they traded it and trade out 255 contracts. That means there are still 300 left as they now going back again to the upside. And look at this. This would be the excess then. If they now again get into this high with buying volume, then we will have a excess on the downside because within a 15 minutes time frame, then they would boom, say, okay, this would be then a strong low. But right now you see selling stays in control. We are not up this area. That means we're building value down here. So that means, again, prices advertises for all opportunities. Time regulates those opportunities. TPO. TPO would be then not a single print, but time price opportunity with a rising mountain of a distribution. And number 3, volume measure success or failure. It means if we didn't see also that this is going on with the volume, that means increasing selling volume again at the low and no initiative buying or absorb buying at the top would mean, okay, nice, this is still working. And this is where you then always start to think of it. We have the bigger picture. Sellers stay in control. We have the small picture. We don't want to see initiative buying up in this area. What we want to see is initiative selling at this area. So when we're reaching this area, we want to see exactly this here. Then we have a chance that they take out the 30 if they're not getting absorbed. They take out and going lower. See what's happening. Please take a look at this. Right at this moment, what is happening? Boom. See this? Here's where you have to watch, and here's where you have to watch. And now see, they took out the low, but find active buyers because there's a lot of liquidity provided in the bid. That means if you really want to get through this, they have to hit the bid as hard as possible because there's a lot of contracts standing in the way. 828. 700 almost at 27, more than 750 at 25, more than 730 at 21. A lot of liquidity. I think this is very clear to describe how you can handle it and where you can be careful with your cognitive resources of your brain. Only watch, again, measuring with volume the failure of success. It's only important to see what's happening at this activity levels of this balanced area here. And this is only this area and this. And you see how they pushed into it. But you see also on the other side how the bulls trying to protect these areas. Because this is our look now again at the area in the 15 minutes. I know I'm talking very much now, but this is so important because this is what makes the difference to become for you a good trader. You see, this is the area where all the longs started on Tuesday. As they took out in the pre-market and the cash market then taken out this distribution edge from the correction phase, from the downtrend from last week, from Monday. So now from this week, from Monday and starting on Friday. So you see, this is yesterday, the phase. And now you see how many potential you have once they get into this. So this is very, very beautiful. You see, they all paying, they all want to hit the bid, and they did. See this? They hit the bid. And you see this, how you could get an advantage by reading this already at this moment. When you see this here, that at the low of this distribution, initiative selling starting again at the low. So this is the time where you can say, all right, then I'm ready. I'm entering here. This delta structure breaks, and we're about to get away from the POC, from this value, and you get a wonderful trade out of this because you see this at this moment, because you measure at the right moment your trigger, and then you know there is liquidity that needs to be taken out, but they traded it. They trade through more than 2,500 contracts. All right. So you see, maybe the people from the funds had some meeting today from 9 to 10, and the big money didn't came in before 10 o'clock, 10:15 today. You see this here also in volume, that without exception, without this move here, but wasn't followed by continuous selling. But when you see here in the ask bid difference, you see how this delta got bigger and bigger once we reach this time frame of 10. So starting from 10, you see the increase of volume here, not in the buy, but in the sell side. And so this is typical. If they have some meetings, they will come from their office meetings in the morning, the big funds managers, and now they took in liquidity and brought in liquidity, but only starting after 10 o'clock. So this is where this is then when people can bring more money in and give you the probability for a good trade. Unfortunately, like I told you, this was outside of my prepared market, of my picture preparation. So that's the reason why I did not take it. All right. Now we have another reaction here, down at the 20 to 23 level. And when we look at the composite profile of the big profile, you see this is the volume edge. This is where everything started on Tuesday. Again, the bulls are still defending this area. And this is now again the next chance for excess. That means you can look now what they do. When they're coming back here to the downside and see themselves with pressure from the buy side, that means you have another chance that they will come back into this level where everything started and getting back and find balance then for the day. This is then the moment where everything will be decided. This would be then some kind of the parting of the ways. We would be then crossroads if the market is going on with sell pressure, or it is more possible at this time, look at the time, that we will find then and get into a balanced market. And you will see then what is happening, because when we're coming back to the low or to the area with the second leg and see then again, boom, 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 buyers coming in, then this will be the sign that we are now looking for a balanced market. And it's okay. I think for me, that's it for my trading today, because this was not prepared, so I didn't take it. But overall, market made its move. Market made its decision to get into a good trade, and market made a good to make its move for the day. We reached even the +1 extension of the initial balanced range. You see that we are not right now seeing big exhausting light reaction at the value edge from the Monday. Remember again where the yesterday bullish trend started from. So this is it, what you can expect now for the Bund to deliver you for your trades. So I will stay live till 11 o'clock, but for me now I will lock my trading here again, and starting my analysis. And if something interesting happen again, and we coming to another activity level, like I told you here again, then we will see. I will comment it. All right, before we end the session, I want you to take a look again to this activity level where we said this is our neckline here. This is our neckline here from this whole scenario. So that means we came back now. We see this is a clear excess now, also in the 15 minutes. See this here? This is a clear excess now taking place here. That means we don't want to go into this lower area here from the Monday distribution, but clear rejection by the buy side. So, and now I'll go back to the trading window. Before we end this session, look at this. When I told you where it is important to measure success or failure. And we had the situation. We didn't come back and build a second leg, but we see the excess on the downside, and now we measure. This was the moment where we said everything started from. Look, this is then the new little value area was created here. And now see when price is coming back to the sell control level number 1, and this is number 2, where we measure where's our activity level. Look in the delta. I will a little bit widen it up so you can see it, but look when price is coming back. See this in delta? Buying, 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 buying. Not super hard, but you see, boom, initial push. They sold first, and then boom, immediately buyers coming back. Selling, boom, immediately buyers coming back. Selling, immediately buyers coming back. Pulling back, some selling, 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 selling. Absorbed, 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 absorbed. And now watch, price is coming to where we measure. This little green rectangle up here, all right? This area where we measured before, where we see either initiative selling but didn't come, but initiative sellers coming here. And now see the opposite side. You see here at the higher area of this balanced area, look at the delta. What is happening here at the top? Buying, break, buying, strong, buying, absorption. Price didn't go down. Buying, buying, okay, rejection, absorption, 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 buying again, boom. That means we see some kind of initiative bias, at least at this moment here, here, and here. And the moment here, 1051, 30, 1052, 30 to 1053. So this area is clearly the top of this balanced area from the selling control, isn't it? Tell me, is it or is it not? Is there some small low volume node? Yes. Is there some liquidity? Yes. Is there a seeable structure in the chart? Yes. Is this the higher area of this little interim balanced area before we start selling? Yes. Is there initiative bias again between 1051 and 1053 without some little break? Overall, yes. Is this a sign then that prices will go back and look for balanced? Yes. Will we end now our session? Yes. So thank you for watching. A wonderful day in Bund again. And I think every day, if you just do this day by day by day by day, you can become so good in your trading. Thanks for watching. This is Anton Höpfel for Manapa Trading.